We are out of control, but you already knew that. On every level, the financial system is out of whack. The Fed is very aware of what they have done. The incorrect assumption is that the Fed is doing this to support the markets perpetually. While this could make sense, understanding their history would make it quite clear that this is not their intention. Control is their desire. We dance like the marionettes, swaying to the symphony of destruction. You came here for the truth, so let me unveil that for you. 10 points to anybody who knows that quote. We're going to talk about what's happening today. The squeeze is, of course, a pun. There are two things that I'm referring to here that we will get into today, and I wanted to start looking at what Sam Zell had to say. We will also cover several indicators. I'm going to show you several charts today to give you a little update on what's been happening. I've got some other information that I want to talk about, Bitcoin and so on. Let's begin right away. Sam Zell calls SPAC craze largely rampant speculation reminiscent of 1990s dot-com bubble. Many have said that as well. You had Jeremy Grantham talking about this just recently. It is getting completely unnecessary and out of whack. We have looked at all of the details leading up until this point, and it just keeps getting crazier and crazier and crazier. And when you're looking at it in the moment, hey, everything's still running fine. Everything's a-okay, but actually looking at the underlying structure and you see how weak it is. You look at the foundation and you realize that this isn't good. If you saw what was going on during the financial crisis 2005 to 2007, you could definitely see that there were problems. Those were all covered up, and we only realized that, let's say 2008, 2009 timeframe. And then, everybody somehow knew at that point. Everybody was a genius. No. We don't see it at the time because everybody's making money. Everybody is piling in the cash and they're being squeezed out of every last drop they've got. Anytime you have an asset that is not performing so well, typically that would be the time in which you want to put your money into it because those are undervalued. But what's happening today is that if something's doing well, you have more money coming in. And this happens at the peak of a bubble. That's why you were having people during the housing crisis that were buying 5 homes when they didn't have anything to their name. This is a problem. This is not the same situation today. You don't have the ninja loans like you did previously. You don't have to worry as much about the subprime issue. You don't have the dot-com issue today because the internet is much more mature. But you've got today it's got its own problems, all kinds of craziness that are taking place on many different levels. I think the worst thing today, the worst factor is what's happening with commercial real estate. And if people would look into that more, I try to highlight it as often as possible, but if people looked into it more, definitely they would see that this has gone completely out of control. Here, further along in the article, Sam Zell is basically just talking about what happened with GameStop and so on. Just to quote him, there's no reality attached to that, so it's just pure speculation. I think that this is very negative for the stock market. It's very negative for the capital raising markets. It's just creating and perpetuating just an incredible sense of disbelief. And can you top this? And further along, he basically says that everybody knows there's going to be one less chair when the music stops, and the 18-year-old mavens are betting that they can get out before somebody else gets out. Now, he's not just talking about GameStop and so on. They were just asking about that situation. But the point here is that everybody believes that they're able to chase this market on the way up, and they are going to be able to sell off at or near the peak before it drops down and buy in when they believe the bottom is in. That is basically impossible to do for the most part. You have very few people who are able to predict it, and if they do, generally they don't get it the next time around. So if they figured it out, for example, with the S&P hitting 666 last time around, all right, some did get that, but then what happens on the other end of that cycle? It's too difficult. So other people say, well, I'll simply just hold on. I'm going to hold. But the problem with holding and the way that it's done today, it's almost, I would say impossible as well, because when we're holding, we're creating a sense of, these particular stocks are somehow impervious to what happens throughout cycles. Throughout these cycles, which are inevitable, the Federal Reserve and other central banks can't stop them. Not all stocks will rise back up to where they were before. The same thing going on in all different markets. In fact, you have to watch very closely and you have to always hedge your bets. This is absolutely essential. I talked about this previously, and if you looked at what was going on, there's obvious speculation that's taking place today on many levels. One of those that I mentioned was the penny stocks. Looking at how well they started to do throughout this period, it made you think about what's happening, because many of those retail traders started to look at the penny stocks throughout the period, and you could see February, basically every single day, up further and further and further. That should give you some insight as to where the speculation is. It's just going into wherever there is something else to be squeezed. Out of Reuters, a squeeze of short positions looks set to drive a further rally in the S&P, Citi said, as hopes for big fiscal stimulus drove the U.S. equity benchmark new record highs. Of course, the stock market's continuously making new record highs all the time, and it depends on what's going on that week. It's stimulus this week, it's the Federal Reserve not increasing interest rates the next week, goes back to stimulus the next week. It's just back and forth, back and forth. If there is any bad news is good news, because that means that the Federal Reserve will apparently do more and there'll just be more stimulus. So bad news is good news is good news. That makes the market pump higher and higher. Nearly $10 billion worth of shorts were unwound last week in the S&P 500, the largest rate since April, and $21 billion shorts still remain and are in a loss. There is potential for further short squeezes, supporting market gains for another week or two, given the size of the remaining short base. I am very interested to see what happens with all of this, given the fact that we have had such a radical change because of GameStop, because of AMC, and all these other companies. It's sort of highlighted kind of, let's say, something that should be upside down of the way that it had been working up until that point. So I don't know what's going to happen necessarily, but I'm definitely keeping an eye on it. That's for sure. This is the most important factor. I think that not enough people are aligning what they are doing with this, and that's the global liquidity proxy. When you see this, the amount of money that the central banks are printing, the stimulus measures from the government, this is the absolute most, it's unquestionable. This is the most important thing that we can look at. Now, if you see what they did in 2018, that started to decline. Looking at the central bank specifically, the stock market did very poorly in that year. And in fact, most assets were doing very bad. 93% of them were in the red. But if you see what the governments are doing, and the expansion of the currency is it's just off the charts. We've never seen anything like this before. Now, that would be, I don't want to say okay, but it would be better if that was going to actually build stuff to fix the roads, the horrible infrastructure that we're looking at in so many major cities. This cannot be resolved by allowing the Federal Reserve to print money and buy bonds. That is not going to be ever fixed, and doing this is only enriching the, let's say, that small group of people. So their whole process is supposed to be helping people, but of course it actually makes it worse. One of the biggest things going on throughout this period, 2021, it has sort of come to light, but it's been going on for several months, and that is commodities. Commodities have increased dramatically from, let's say mid 2020 into this time frame, and it if you look at it, you get commodities based on the grains here as they show, but also with other things like oil. Oil has risen quite a bit. This is never a good thing because that's going to put the squeeze on people. The amount of money that they have to pay for general things, their food, is going to increase. We've already seen that increase. There's no doubt about it. And unfortunately, they don't measure it properly, or else we would see that in inflation. But this is just giving us some insight as to what we can expect, because there's always a delay. If there's an increase here, it's not as if you're going to go to the store tomorrow and see the price hiked, but you're definitely going to see that as the months roll on. It's not a coincidence, but you can see what's going on with the dollar index. Over the past few trading days, certainly that has declined. But if you were to take that back further, and I believe I have that chart up, you will see that the dollar, it is not looking very good for it. And that means that in one way could be better for exports in the US because the dollar's not as strong. But at the same time, you look around the world, when they have to do imports, it's a little bit cheaper. And you also see the exports to the United States that has an impact on this as well. So these currencies are floating against each other and they are priced in US dollar. So that does have an effect. We'll see what goes on and how long this lasts for, but certainly for this period of time, it has been declining. That's right, I did pull it up here. So you can measure the US dollar, or anything else for that matter, against the fiat currencies, or you can measure it against something else. In this case here, what we're looking at is US dollar versus fiat, that's the green line. And from 2020, it has basically been declining. And you look at it versus Bitcoin, that's the red line, and it has been just terrible over this period. There's no doubt about it. And gold as well. This is just something that I like to look at. I always like to measure something in something else, because when you look at the US dollar as an index, it's not really fair, as I mentioned maybe in the 2 videos ago or 3 videos ago, whereby basically you can see that over a period of time, things change. Things are going to change in one country or another, and that's going to affect their currency. So that's not going to tell you much about, let's say, the US dollar if it's affecting something in Europe, because it might be weakness in Europe that's making the US dollar look better. So you have to know a little more about it. But if you price it in gold, or in this case, Bitcoin, or maybe wheat or oil, that could tell you another level. You don't just look at that one individual thing, but you start to measure it in 3 or 4 or 5 or 10 different things, and you get a better idea. This is just showing us the devaluation of the currency. This is one that I'm sure you are aware of when you look at the comparison between the GDP and the Wilshire total market, and you will look at what happens. Never been at these levels before. You can compare the two directly as a ratio, and that just gives you some insight. We are at a record. But looking at what has happened with the GDP supposedly almost going back on track on the upward trend, but it's nothing, absolutely nothing in comparison to what we have seen with the markets. The markets have accelerated beyond anyone's wildest imagination, and that obviously correlates to what they've done with the money printing and so on. Quick look at this right here. I found this to be interesting, wanted to bring it to you. Keep an eye on ARKW, ARKW, and that's basically ARK. They have a particularly high level of holdings in Tesla and others in here, and I believe they actually own Bitcoin as well. This is just showing you how much they've got invested and their performance so far. There has been an extremely huge wave of cash flowing their way, and that's for sure. And why? Because they own so much Tesla. They've performed well. The stock has performed well. So we have seen this inflow into their funds as well as with Bitcoin itself. You could see their major holdings right down here if you are interested. Tesla being their number one, it's over 9%. So for any particular fund, that is a big numbers. So if we do see that Tesla does start to drop, certainly this fund is going to see some outflows, but we'll see what happens. Quick point before we finish off. Taiwan's economy feels the heat as TSMC feeds global chip boom. I had just talked about what's going on with this chip shortage. There are companies out there that need to build these electronic devices, whether it's cell phones and computers and so on, but there's a chip shortage. Just a short period of time of having that supply chain disruption, suddenly that created a problem, and you felt that months later. So right now, this is potentially good because of the high demand that gets people working again for Taiwan. And we'll see what happens to their economy. We'll see what happens to the inflationary pressures as a result, the raw materials involved there. There's a lot to that. So we'll see what happens, especially at this time right now where you've got China on holiday, big long holiday. So their economy is definitely going to be slowed down as predicted throughout this period. Happens every year. And I want to know how that's going to impact what we're seeing with Taiwan. And because of the obvious integration between these two. I'm going to end the video there. If you found this video informative, hit that thumbs up button. If you hated it, you definitely want to give me a thumbs down. I appreciate that. If you want to learn about e-commerce, you can do so for free at the AmazonGPS.com. If you want to learn about the financial system, you can just check out these two books. I know that they will be fantastic learning, easy to learn from, and all you got to do is go to the link at the description because that's going to allow you to flip through the pages of the books for yourself. And if you haven't seen this video yet, you definitely want to check it out. I think it would be very helpful to see how this process works, how the collapse could work, and how it will come to fruition. Click it. I'll see you there.